technical indicators, a cause of a lot of debate in the trading community. A lot of people saying that they really work and they truly believe in it. Others saying that it's nothing and shouldn't be looked at. But in my personal opinion, I believe that it works. It is real. So today, the discussion point is not whether technical indicators work or they don't work. Let's discuss today what are the favorite indicators of few top traders that you like. And we'll try to understand why they use that particular indicator and find some practical uses of the same. So let's go ahead. This is Ajay Ajith. Welcome to Market Feed. So in your opinion, which is your favorite technical indicator?
People used to follow the price, but in my opinion, indicator is nothing but a derived price only. It's derived from the price only.
Price and or volume.
Yeah, it is derived from the price.
Yeah.
Most of the time it is derived from the price.
Yeah.
So thus I would consider the indicator is also one of the price. Okay.
Yeah.
So in my opinion, okay. And we can define the indicator in different aspects, but in recent times in Indian market, the momentum is continuing.
Okay.
So the momentum is good rather than the trend. Okay.
Yeah.
So market is reaching all-time high, and Indian economy is a developing economy.
Yes.
So thus you will find a lot of stocks or even indexes going all-time high.
Yes.
So thus you can follow any momentum indicator. One of the momentum indicator I use RSI.
RSI.
Yeah. It doesn't matter you should only use RSI. You can use anything, but RSI is a simple one, so I use it.
I think most people who I talk to, they're coming out with very simple indicators and they mostly prefer very few. Right?
Yeah.
Retailers, especially beginners, try to find 10 different indicators and then combine them. But mostly it is a most simple one that stand out, right? So yes, talking about the favorite technical indicators of pro traders, which one do you use most? Which one do you prefer?
So, of course, the most return yielding indicator for me is super trend. But the best one I like is RSI because it is a mean reversion indicator.
Okay.
And our RSI settings, typically don't go like the general settings, which is, 40 and 80 kind of levels. Below 40, it's a oversold zone, so you buy, and above 80, you sell.
Yes.
So we have our own this thing. The formulas for making the RSI remain same, but then we have 1 minute, candles.
Okay.
And then for the last 60 minutes, we then find out RSIs for the underlying, which is the Nifty or the Bank Nifty. So our RSI level typically fluctuates between, 15 to 40 or maybe 35.
So you keep on fluctuating.
No. For us, because of, we've changed that scale.
Got it.
So it's not 40 to 80 for us, but 15 to 25.
Okay.
And
so
then,
it is a modified version of the tried and tested or very popular RSI indicator, but then modified it to your strategy or like...
Yes.
Yeah.
On our data.
Nice to hear. So many people are very curious to see what crazy indicator that the pro traders use. But it's always mostly a simple thing that people
actually
prefer.
It's never good to complicate things.
Yeah.
And, trading is all about simple maths. You apply those rules. I keep on saying you apply those rules, which you apply for the stock market. You go to a casino and you apply the same rules there, you will win there as well. So it's all about mathematics, probabilities. You just need to know when to, when they play in your favor. And, scale up, scale down accordingly.
Let's ask Mr. Gomathi Shankar on what your favorite technical indicator is.
So always my favorite indicator is CPR, central pivot range. Apart from that, my favorite indicators are moving average and VWAP.
I think nobody will be surprised when he says CPR here. Because if you know him, then you know his name is synonymous with CPR in India, right? So would you like to give a bit more perspective on any settings that you use, any technique that you use while looking at CPR or let's say moving average, which is your favorite moving average time frame or anything for the viewers?
Okay, so CPR, I use daily CPR, weekly CPR as well as monthly CPR across different time frames.
Okay.
And moving average, basically I use 20, 50 and 200.
Okay.
So
all our daily time frames.
I use multi-time frame. I think there is an extra edge when you use multi-time frames. When you use a daily chart along with hourly chart and then you compare with 5 minutes chart. This gives an extra edge to understand the direction, to understand the trend, to understand the momentum as well.
Got it.
So I use CPR moving averages across different time frames, and this multi-time frame approach gives me an edge to time my entries better.
So no matter what indicator that you use, right? Try to always use multi-time frame because it is giving you sort of a double confirmation, a triple confirmation.
True.
Also, more indication of that strength of that, let's say, a particular stock, right?
Yes, exactly.
Even in CPR, if you're talking to Mr. Gomathi Shankar right here, you would know that he won't suggest one perfect, time frame to look at.
Exactly.
Yeah.
Exactly.
So I think a lot of beginners confuse or try to focus on that one indicator or like
One particular time frame.
one
People
particular
try to
time
jump
frame.
to 5 minutes chart straight away.
Yeah.
So they should start from daily chart, understand the overall trend, and then you have to shift to hourly chart or 15 minutes chart and 5 minutes chart to understand the momentum of that particular instrument.
Yeah, I think that is a theme which is coming out here. Don't use too many technical indicators. Don't be obsessed with one setting or one don't be close-minded. Don't be so open-minded also. There is a sweet spot, I think, a few indicators, maybe 1, 2 or max 3, right? That's my personal opinion.
Yes.
Where I think more than that, retailers will start getting confused.
That's true.
Right. So yes, thank you for joining us in this video. We'll meet again.
Thank you. Thank you so much.
So yes, the question, Sharique, it's on to you.
Yeah.
What is your favorite indicator and how do you use it?
Very difficult question, honestly, because how do you call something favorite? I mean, that's very superlative, right? I mean, you're being superlative and saying that this is my favorite indicator. And I hope a lot of people would eventually watch and it shouldn't go out in a wrong way as well, right? Them believing that this favorite indicator that we are talking about
Definitely.
is a holy grail and they could definitely make profits. Nothing of such sorts. There are a lot of indicators available. A lot of them are good. But then obviously there are a few which I personally like, which in no ways mean that those are the best ones. With that disclaimer, I'll probably get into it. But again, my journey with indicators have also been very interesting.
I wanted to bring it up. Great that you brought it up, but yes, go ahead.
Right. So early in the days, I used to look at indicators while I was trading. Then came a phase in my life when I got into my famous Iron Condor strategy, option selling strategy. I stopped looking at indicators mostly altogether. Some references, but mostly I was more of a chart guy, just looking into the charts and looking at price action and trading. But now it's full circle coming back again, and I it's not necessarily the right word. I look at indicators. I definitely derive certain things from certain indicators for running the different kind of trading strategies we run in my account now. But yeah, answering to the question now, right? So I see indicators are or could be divided, categorized based on the sources that they work on. For example, the regular indicators that you work with, you see on the charts are basically the indicators are derived from OHLC data.
Price.
Yeah, price basically, right? So you say open up your chart, trading view and say there's a 5 minute chart, and then you add any indicator there as an overlay or as an oscillator. All of those indicators, the input for those indicators are basically price of the instrument.
Yeah.
So OHLC data is what they use to compute the indicators.
Yes.
So these are indicators which I would say are indicators which are made from price data.
Okay.
Mostly price data.
Yeah.
Then there could be indicators which are made from volume data. Right? We've heard a lot of indicators. Then there is another source with which there is an indicator available, which I am liking a lot of late. And the source is traders. What are traders doing in the market?
Traders
and their
the
positions.
general market.
The general market.
Okay.
So we are not even looking into price or volume to get an understanding of what's happening in the market. You are actually looking into the positions of other traders in the market to understand what they are thinking.
Okay.
The indicator is nothing but PCR.
PCR.
Put call ratio, right? The put call ratio is very famous. Whenever we talk about options, we talk about put call ratio. But the entire underlying, so whatever video anybody watches about put call ratio, that's what they say, right? It is put the total number of put contracts divided by total number of call contracts. So it is said that if it is above 1, the market could be bullish.
Yes,
if it is
that
below
means
1,
more people have sold puts. So generally, the market considers option sellers to be the contract writers, and that option sellers have more information, right?
And they would eventually.
Yeah. So if put writers are more in the market, you can imagine that market has a lower tendency to move down, right? And this PCR being greater than 1 means that there are more
tendency to move up. More puts being sold. So they are expecting the market to move up.
Exactly.
So more puts being sold, the numerator is higher in your put call ratio, puts by call. So it is above 1. So above 1 is bullish, below 1 is bearish. So that's the plain vanilla way of looking at it. But then there are more nuances when you dig deeper into PCR. So that is what I like. So simple PCR is simple, right? Above one is bullish, below one is bearish. But then you dig deeper, you analyze it better. You see PCR talking to you, telling stories, and that is something which because basically not PCR telling you story, right? It's all because
It's a number to judge the emotions and real positions of
the
traders.
activity of other traders in options.
Yes.
So we can see every single person, it be retail, a big player, FPI, FII, whoever, if they have sold or bought an option contract in the Indian market, that would get reflected, and their emotions, their decisions are getting translated by how OI keeps moving, fluctuating. And eventually PCR, how it keeps moving.
Into a very simple number.
Yes. So that I feel is fascinating, and I've been liking that a lot. So that's that now. But again, because OSLC indicators are very famous, I always think the very simple, very normal, boring moving averages, I think is very versatile and can be used in a lot of different ways. So that's something that I think a lot of people know that already, but I think the strength of moving averages most of the times overlooked because it's very simple. So people think that, hey, that's not great. People always want complex, amazing, non-heard of stuff. But moving average, because at the moment you start working with the look back period of moving averages and then you stack them together, again, it could be tweaked to your requirements. It could be a very fast way of knowing what the trend is, or trend is changing. It could react slowly. You can play around with it a lot.
So just to break you there. So you're talking, earlier we talked about multi-time frame analysis, right? So Sharique is not mentioning about that. He's saying in the same time frame chart, you have multiple moving averages plotted. For example, let's say 9 EMA, 20 EMA, 50 EMA, 200 EMA, all in the same chart, looking at the same time frame candlestick.
Exactly. So same time period. So you're looking at, say, Nifty from a 5-minute candle time frame, and you have a 10, 20, 30, 40, 50, 60, 70, 80, 100, even a 200 moving averages all plotted together. So what we are changing basically is the look back period of the moving average. So the 10 moving average is looking into the previous 10 candles of Nifty. The 20 is looking at the previous 20. So the 10 will react very quickly to trend changes. 20 will slightly lesser, react slightly slower comparatively, and your it goes on, right? So you get the point. So as and where you increase the time period, it will start reacting lesser. Now then you can, so that's the larger gist of it. Then you dig deeper, you understand how they are reacting to each other. And again, like I said earlier, that each of the movement of all those moving averages in relation to each other, they also have a lot of stories to tell. So yeah.
So just breaking you there. So having multiple look back periods in the same chart for moving averages will help you balance out between speed and accuracy.
Correct.
So the lower the look back period, the more reactive it will be.
Correct.
So the more speed you will have.
Yes.
The higher the look back period, the more accuracy you will have.
Yeah. And you will be less reactive.
Yeah.
Correct.
And it's sort of like a scale, right? It's on the same plane. So you'll have to weigh out what you want to achieve. Do you want either speed or do you want accuracy? But the benefit of using this multi look back periods using moving averages is that you don't have to compromise.
Yes.
Right.
You get the best of all the worlds, and then you look at them together and take a decision based on how are you going to use it.
Crossovers.
Yes.
Yeah.
Yeah.
All that.
Yeah.
So thank you, Sharique.
Right.
Yes.
Thank you very much.
See you again.